And joining us now is Peter Andersen, a Chief Investment Officer, founder, Andersen Capital Management. Thank you so much for your time today, Peter. Look, an interesting move in the markets, obviously, that we've seen off the back of this renewed tension between the US and China. There's been a lot of talk about, being priced to perfection in this market. What does that tell you?
Well, I'm not sure the market is behaving just from the Chinese situation. I do think there is increased momentum and focus on artificial intelligence, all the money that has been spent in capital expenditures, and when are we going to see the actual manifestation of business plans. And so as we approach this earnings quarter, I think there will be intense concentration on those kinds of issues. Not so much the tariffs, but after $400–500 billion of spending in AI, just where is the beef, so to speak, in that?
Okay, so you're putting the sort of sentiment, the risk off that we're seeing in the market, not just down to sort of renewed US-China tensions, but perhaps some questions coming from the market of, show me proof of all that spend.
Yes, exactly. I have been harping on this actually for some time. I sold my NVDA shares over a year ago. I have been a great proponent of artificial intelligence, but as I've come to realize, the AI, like every other debacle, frankly, travels in cycles. And so we are now enjoying what the specialists call an artificial intelligence spring, not a winter. However, this is cyclical. I think at some point, the scientists and developers will say, you know, this is a good thing, but it's not the cure-all. It's not replicating human thought. And at that point, I do think there will be a correction in AI stocks.
I mean, you've got to put it to Wall Street and credit them somewhat. I mean, they've been pretty patient all this time, with, just continuing to sort of pump the markets with respect to the fact that there's been no questioning over, real monetization thus far, even with the DeepSeek breakthrough, which brought us back to January early this year. It's so easy how we've sort of put that in the rearview mirror for now. But you believe that this could be the quarter where we really find out who's monetizing AI. I'm just wondering, do you believe that this is going to be the make or break then?
No, I don't. I think that these things usually last much longer than I would like them to last, actually. So I think this quarter will be the first of maybe several focused quarters where they will be talking about this. And, I have to say, people have compared this. The question always is this similar to the dot-com bubble? And people resoundingly say, no, it's not, because those companies had horrible balance sheets, and these companies, the Mag 7, et cetera, are well capitalized. I agree with that. However, the big difference is in the dot-com period, at least they had business plans. If you were buying toys.com stock, you knew what they did. They offer toys on the internet, period. When you're buying into AI type focused stocks, you don't even know why you're doing this. There is no business plan. I have yet to see any of the developers come out and say, here's an excellent example of how AI is going to actually put rubber to the road, so to speak.
Okay, so we're very much going to sort of shift to a bit of a prove me moment in time, no doubt, Peter.
So,
just want to shift gears right from the sort of the micro to the macro and just get your thoughts on, how the market is currently pricing in the expectations of further rate cuts. 25 bips this month, even without the data and a data-dependent Fed.
Yes, there also is a wave. You're probably picking up that I'm quite a contrarian, and I'm going to continue that theme with the interest rate cuts. I think it's ridiculous, frankly, to have an additional interest rate cut, not only because the data is missing, but because I do think the economy is fairly strong. And the unemployment numbers, the past data numbers, all of them have been somewhat mixed. And I do not think there is a screaming indicator that we should continue to cut rates. We're used to low rates from the COVID period, but if you look historically, we are not at historically high rates at all. In fact, we're in somewhat less than the average rate. So I don't think that it's justified. However, the political pressure to cut rates is enormous, And also the market pressure. I would say the current narrative for 9 out of 10 people that you have on here will totally endorse a rate cut. And frankly, just like the missing business plan, I don't see the logic behind that either.
Look, I mean, it's not exactly contrarian, Peter. I mean, certainly not consensus, but it is a view that's gaining very much traction, you could say, as far as, you know, some thoughts out there about cutting into maybe even a re-acceleration of growth. But I just wanted to sort of tie that back to the earnings and what we've been hearing from the big banks this morning. I mean, you know, deal making and trading activity looking good. I mean, every week we see a new IPO here, but I'm just wondering what that's telling you about this sort of two-track economy, you know, Wall Street versus Main Street, what we're hearing from the consumer as well.
Well, I think that that's showing you that the underlying business is very, very strong. And so when banks are giving you that type of information, hints about how they're going to report, that's a pretty good sign that things are in fairly good shape. So in my opinion, that seems like it bolsters the argument to just keep rates steady. And let's also add, as you mentioned, you know, the lack of data coming because of the current government shutdown certainly doesn't give you more confidence in assessing the economy. So at best, I think what the Fed should do is maybe perhaps to save face, because they don't want to do it in any other way, say we're just pausing until we get more information, so we can make a more intelligently informed decision.
Okay, well, all eyes and ears on Powell later today, and then let's see what they do in the next couple of weeks. Peter, really an absolute pleasure to talk to you this morning. Thank you so much for your insights today. Peter Andersen, Chief Investment Officer, Founder, Andersen Capital Management.